I find it interesting that he is, very consistent on this point, but has $120 billion in cash.
Yeah.
Hates bonds, but has got a lot of dry powder and a lot of cash. Apple, the worldview on Apple, the way it's viewed as a kind of consumer product that is so entrenched in people's lives, that makes a lot of sense to me. Also, what he said about the packaged goods companies. Now, Berkshire wouldn't be interested in whatever's left of Campbell's, but just this idea that you have to look through this period when retailers seem to be able to beat up the brands, and there's value there. So all that stuff makes a lot of sense. And the buying back of Berkshire stock shows some flexibility at his age. In the thinking about exactly what financial discipline means. He's not going to be so strict about it. And finally, at age 88, his attention span is a little bit too short for podcasts, which is hilarious because you think of younger people as saying, they take too long. But he'd rather read it.
Yeah, the airlines that started the day, as we've seen with the transports overall, lower. And on his comments, we've seen those major airlines that Berkshire has holdings in pair those losses. They're all actually trading higher in the last couple of minutes, so that's certainly noteworthy. The other thing that really got my attention is the comments he made about inflation and costs rising, especially on a day when we've had a reading on inflation. The fact that it's not just tariffs, it's also just a stronger economy, and that they've seen raw materials increasing in price even before those tariffs were put in place. Really sort of stokes that whole inflation debate.
Yeah, I mean, it's a reminder that Berkshire as a company is this enormous footprint on the U.S. economy, and so he can kind of see that stuff bubbling up, the cost pressures and pricing power and things like that. And clearly, it's made an impression right now. He moves a tremendous amount of stuff, obviously with the railroad, even moving energy with pipelines. So it's all right in front of him, and I think that makes sense. He's seen many cycles and has a sense of how they're trending.
Not a surprise that Apple was really one of the first things that Becky discussed with Warren. Apple's up about 0.5%, obviously the biggest holding at Berkshire, and Warren Buffett talked about the degree to which he's been buying recently or not. Take a listen.
I bought just a little bit. I like to buy them cheaper. I mean, it's very difficult. I started buying when the stock was maybe 100. I was buying it kind of as fast as I could. And then I ended up buying some as high, a whole lot higher. I won't name the exact price, but a whole lot higher. I'd rather have it go down. For one thing, if it goes down, Apple's going to buy a lot of stock back. They're already buying stock back. And if it goes down 10%, it means they get to buy 10% more shares. And my interest will go up 10% more for spending that money and buying shares. So I am benefited by going down. If I were to talk my book, I would talk it down.
Bob Pisani's with us as well. That's classic Buffett.
Yeah, okay. So if I was talking my book, I would talk it down. And then he goes on a rant about how wonderful Apple is and he owns 5% of the company. Can we put up Apple's intraday stock price? Apple was at $223.65 when Mr. Buffett began talking about it. Immediately spiked to $223.85 or so. It went up about 20 cents. There you go. Look, that initial spike there on the left side you see. So what's that worth? He owns 240 million shares times 20 cents, $50 million in about 6-7 minutes. Mike, that's talking down your book.
Well, I actually think the fact that he simply said he remains a buyer is probably all he had to say. In other words, it wasn't so much that here's why I think Apple is great. It's that I don't feel like I own enough, and that might be the one thing that the market.
Yeah, but
yes, your point.
If I was talking my book, I would talk it down and then proceeds to talk about his book. So I'm just saying, let's all just pay attention here. I'm not suggesting there's any prestidigitation going on here, but seriously, look what happened there.
His point was about the utility of the iPhone in particular.
Oh, we all agree.
He feels it's underpriced. He'd rather give up his airplane than give up his iPad, for instance.
Okay. I think it was important for him to reiterate that stocks are more attractive than bonds. Here, he simply reiterated an historical fact. Mike, you and I have talked many times. Long-term return for the S&P 500, about 9% with the dividends. Long-term returns on long-dated government bonds, 5-6%, depending on the time period. So he was stating an historical fact, but it's important to reiterate. An investor like him believes long-term stocks are still the place to be.
I also do think, and Becky did press him on this, is the only reason that stocks are more attractive over a very long horizon because you're comparing them to what you can get for bonds. I mean, he was careful, I think, a couple of times to resist the opportunity to say, this market's a screaming buy right here.
I thought that was the thing that was missing.
Yes.
Was every comment had limitations as to why he would buy more. On
Right.
packaged goods,
Sure.
on airlines keeping it below the cap, on Apple because it's gotten a little more expensive, right?
Yes, and I think that, 8 or 9 years into a market advance, valuations being what they are, the fact that he has all this cash and has not necessarily seen a compelling thing to buy at the moment yet, does basically tell you this is where we are in the cycle. I mean, his history usually, for most of it, has been when things seem depressed, when other people are forced to buy or feel forced to buy, he's willing to be there as a buyer.
I also think
forced to sell, rather. Sorry.
I think it's also important he clarified the quarterly reports thing as well, okay? So he does not like guidance, but he's okay with the quarterly reports. We had this gigantic debate about this when the president came out and talked about it. Warren Buffett is now very clear. He likes quarterly reports. We had a big debate about this. The SEC exists partly because they mandated quarterly reports in 1934 when the SEC was created because of the problems they had with getting information from companies in the 20s and 30s to prevent fraud and to make sure people know what's going on. So I think that was a very important clarification he made.